So yeah, we have a very special guest on our podcast today, and let's talk to the guest, talk about the property, how you can purchase. Hello, Mrs. Elaine, how are you?
I'm good, thank you, Sajan. Thank you for inviting me.
Thank you so much for coming to this podcast, and we're gonna talk about the properties,
Yep.
how to buy a house.
Mhm.
But before that, may I ask, like, how did you land into this job?
How did I become a mortgage broker? Okay, how I became a mortgage broker is because me and my husband kept wanting to release equity in our current home in order to buy a second property, and we kept going to the banks, and the banks kept saying no to us. So that kind of started me questioning the process,
Right,
and indirectly maybe pushed me in this direction into becoming a mortgage broker myself,
right.
where I
And-
can also help other people to know how to get into their first property or their second or their third.
Right. Okay. So let's talk to the first step. How do I can how can I get the loan approval? What is the process? If I want to buy a house, I'm a resident here, I'm working full time,
Yeah.
and let's say either I'm single or with partner,
Mm-hmm.
what difference it makes?
Okay.
How I can get the approval? What is the first step?
Okay, the first step, how the bank looks at lending you money, they look at equity and they look at your income.
Right.
Equity is your deposit, basically, how much of the property that you're going to own. Most banks in New Zealand will need a 10 to 20% deposit.
Right.
And the other thing that they look at is your serviceability, which means how much you can pay for the loan, your
Right.
income versus your expenses. There is also something else that first home buyers need to be aware of in New Zealand is that there is a first home loan scheme that is underwritten by Kainga Ora. So under this scheme, a first home buyer is able to use a 5% deposit to buy their first home.
Right. And is there any limit like they can look up to?
There used to be a house cap, but
Right.
the government got rid of that. So it means there is no limit to what you can buy.
Right.
The only limit it is only limited by how much income you have,
Right.
and therefore your serviceability of that loan.
Let's put example here. Like you mentioned, you need a 10 to 20% deposit. This is the bank. They look at how much equity you are going to have in a
Yeah.
house.
Mm-hmm.
But let's say I don't have 10%. I have got 5%. The
Yeah.
one you mentioned, like you can get through Kayunga.
Kainga Ora, yeah.
So what is the criteria for that?
Okay, so Kainga Ora does have a few criteria in place. Number one is you need to have a stable income.
Right.
So that means you need to have been in your current job for at least a year, or
Right.
if not, you have to have been in the same industry for at least 2 years.
Right.
And there's an income cap whether you're a single person or a family or a single person with dependents. If you are single and you're applying on your own, the income cap is $95,000, meaning you cannot earn more than $95,000. If you
Right.
earn more than that, you can't qualify for that loan.
Right.
But if you are a couple or a family with dependents, then the income cap is $150,000, meaning your entire household income cannot be more than $150,000. If you satisfy both of these conditions, then you highly likely you can qualify for that first home loan.
Right. And does it have to be a brand new house or the used?
Kainga Ora doesn't specify,
Right.
but they do need to approve the property that you want to buy. So we encourage our customers when they're house hunting to send us through the properties that they're looking at. Sometimes we will know whether those properties are okay with them, but usually what we will do is we'll send that to the bank, and the bank will let us know whether they're happy with that property or not.
Right. Otherwise, you have to look for another property
Yes.
to meet the conditions.
Correct. The only exception is I think they don't do apartments, but other than that, townhouses, landed properties, they are quite happy to do that. And it doesn't have to be brand new.
Elaine, tell me what should be the first step if first-home buyer should think about buying a property in New Zealand?
So the first thing that first home buyers should do is get a pre-approval from the banks, which we as mortgage advisors can help them with that process.
Right. So, can you please explain me what is pre-approval and why it is important?
Okay, basically a pre-approval from the bank means we are applying for a loan from the bank and they pre-approve you for a certain amount. Say you come to me and you say, hey, I want to buy a house for $800,000. So we will apply to the bank for a pre-approval to lend you the money that you need. And with a pre-approval, it actually gives you a better bargaining power when you actually find the property that you like.
Right.
When you want to make an offer on a property in New Zealand, you basically put a dollar amount in there on the sell and purchase agreement, which the real estate agent will then bring to the seller, present to them, and then see whether they want to accept that offer. So when you have a pre-approval, you're telling the agent that you have already sorted out your finance, which puts you in a stronger position in terms of what you're offering, versus the guy who possibly has not sorted out his finance yet and just walk in the open home and want to put an offer on the property.
Right. And let's say if someone doesn't have a pre-approval and they put down the deposit, what is the
implications of
yes.
that? Okay, so with every sell and purchase agreement, there's a due diligence period. It's usually 10 to 15 working days. If you already have a pre-approval for finance, for most sell and purchase contracts, the highest chance of that contract falling through during the due diligence period is due to finance.
Right.
So if you already walk in there with a pre-approval from the bank, subject to a few conditions of course, the agent knows that you are already approved for that certain amount of money, and therefore that is a strong offer.
Whereas if you don't have a pre-approval,
yeah. Whereas if you don't have a pre-approval, so I'll put this in the scenario of a deadline sale, for example. So by deadline, people put all their offers in on that property. Two offers maybe, and you're the offer with a pre-approval for finance, and the other person doesn't have a pre-approval for finance.
Right.
Therefore, your offer is stronger, even if the amount you offer is less than what the other guy offered.
Yeah.
But your finance is
you are on
sorted out.
a more strong side because
Yes.
you already have a pre-approval from the bank, and the seller knows, okay, this
Yes.
guy has
There's
already,
less chance of
yes.
this condition of this contract falling through
Yeah,
because finance cannot get approved.
makes sense.
Yeah.
Right. Okay, so now let's talk about the next step, like how the banks or the lenders decide how much money you can borrow. What they see in your income or
Yeah, that's a good question. What the banks look at is your income versus your expenses
right,
and versus any loans that you may have.
right,
So basically they look at how much you can service your loan. Your loan serviceability depends on how much income you have versus how much expenses you are committing to every month versus any other fixed expenses such as loan payments that you're making. The banks do look at some benchmarked expenses for, say, a single person versus a family of 2, family of 4, family of X numbers, and they will take that benchmark in determining how much you have to spend every month.
right,
On top of that, and this is something that every first home buyer needs to be aware of, is how much debt you have. Because you may have a credit card with a credit limit of $3,000, but you don't spend a single cent on it. The bank will still look at you having $3,000 of debt
right,
every month. So, and the banks are quite, especially for first home buyers, the banks are quite strict on extra loans other than your mortgage because they don't like you to overextend yourself. And we as mortgage advisors, we will also look at all that because we also don't want our clients to overextend themselves and end up not being able to pay their mortgage at the end of the day.
So I'll make it in simple words. I can say, like, if I have different types of credit card and XYZ amount of loans,
Yeah,
I'll have the less borrowing amount for the bank or from the lender.
definitely. You will decrease your borrowing capacity significantly if you have debt. So as a rough benchmark, every $10,000 of debt reduces your borrowing capacity by about $50,000 to $80,000 depending on the bank.
Oh, really?
Yes. So say you have a credit card of $5,000,
Yes.
immediately you can borrow $25,000 less
Right.
from the banks.
Right. Okay, so I have a question in my mind, like, how do I know which bank is good for me?
Okay, that's a really good question. Every bank's policy is different and
Right.
every customer is different. What we do is we try to match the right bank to the right customer. For example, you may tell me you will have the capacity to make extra repayments because you're going to get a pay rise. So I will tell you, okay, we go to bank X because they allow you to make extra 20% repayment over your minimum payment, and we won't go to the other banks because then they will charge you a early repayment charge for making extra repayments.
Right.
So there are things like that that a mortgage advisor will be able to let you know whether that bank is the right fit for you.
Right. The next part I want to cover is there's a Kiwi Saver
Yes.
for New Zealanders.
Yes.
What is Kiwi Saver and how I can use it?
Okay. Kiwi Saver is basically the government superannuation scheme where you contribute a little bit, contribute part of your pay every month, and your employer contributes as well. And this is good for first home buyers because you can now withdraw from your Kiwi Saver to use as your deposit, provided this is your first home and you have been with Kiwi Saver for a minimum of 3 years.
3 years. So if someone has less than 3 years, they cannot use the
They
Kiwi
can't,
Saver.
they will have to wait for their 3rd year anniversary and then they can withdraw from it.
Right. Okay. And let's talk about Kayonga Ora because you mentioned someone can buy a property with 5% deposit.
Correct.
So how, what is the eligibility criteria for that?
Okay, so under the first home loan scheme, underwritten by Kayonga Ora, you can go in with a 5% deposit like you mentioned. There are a few criteria that you need to fulfill. For example, you need to have been at your job for at least a year.
Right.
And if not a year, then you have to have been in the same industry for at least 2 years. And if you're a single person, there's an income cap of $95,000. So you cannot earn more than $95,000 to qualify for this.
Right.
And if you're a family or a parent with a dependent, then your income cap is $150,000.
Right. So combine 150,000
Correct.
if you are a single, less than
$95,000.
$95,000 to qualify for 5% deposit with Kayonga Ora.
Correct.
Right. And which makes obviously if you have income more than $95,000, then you have to meet the general conditions like 10% deposit or 20%.
Or 20% deposit, yes.
Right. So let's talk about I have got a deposit now. I have got a pre-approval.
Yes.
And what are the other hidden costs you think I should be or the first home buyer should be aware of? Yes.
So first off, the obvious one will be your legal fees. You will need to
Right.
engage a solicitor.
Mhm.
We do encourage first home buyers to get a solicitor to look through a sell and purchase agreement contract before they
Mhm.
actually make an offer on it.
Right.
The other costs are for anything. This is required from all the banks in New Zealand. If your deposit is less than 20%, you need to get a registered valuation done on the property you want to buy. And this will cost anything between $800 to $1,200.
Okay.
So-
$800 to $1,200.
Yes.
Okay.
So those are your upfront costs that you have to pay. You may also want to get a building report done on the property, especially if you're buying an older property, because you want to make sure that it is all good for you and your family to live in.
Let me ask you this because you mentioned about register valuation
Register.
because most of people they will not know if someone is watching outside of New Zealand.
Yeah.
For them, what is register valuation like? How do banks see that?
Okay. So a registered valuation is done by a registered valuer
Right.
who will go to the property that you are wanting to buy and actually inspect it and give a market valuation on what that property is worth.
Right.
So banks need this if you have a low deposit. Anything less than 20%, they consider a low deposit. So then they will need this extra piece of assurance, I would say, to make sure that you are buying the property at its market value.
Market value. You're not buying too much expensive.
Yes.
Or because
You're
makes
not
sense.
overpaying for that property. So in a way, it safeguards that first home buyer as well.
Right. Okay. Okay. So now we are at. I have got the pre-approval. I have got the deposit sorted. What is the next step?
Okay, you have your pre-approval, your deposit sorted, you found a property to buy, and you're
Yes.
making an offer on it. So when you make an offer on a property in New Zealand, that usually means you sign a sell and purchase contract. On it, there will be some conditions, and it is usually 10 working days to fulfill those conditions,
Right.
and this is what we call the due diligence period.
Right.
So during this due diligence period, I work with you, my client, to satisfy all the bank conditions, and then you will work with your solicitor to satisfy all the other like building report, limb report, and title conditions. Once all these conditions are done, you confirm on your contract. This is when you go unconditional. So after you go unconditional, you and me will sit down to structure the loan. So we will have a loan structure meeting. And during this meeting, I will then find out from you, my client, whether how you want to structure it. Some people fix the entire amount for 12 months
Right.
on a 4.99% interest, for example.
Yeah.
Some people prefer to split the loan in two.
Mm-hmm.
So I can give you a very specific example. One of my clients told me that they possibly will have a sum of money coming in from family in about 6 months' time, and they want to pay down their mortgage
Right.
during that time. So then what I will say to them is maybe you can split your loan in half, fix one for 6 months and fix the other one for a year
Yeah.
at different interest rates.
Mm-hmm.
So then when come 6 months time, when the money comes in and your loan comes off the fixed interest rate, you can then pay down that loan without incurring any early repayment costs.
Right.
So that is how we usually structure the loans. How we structure the loan usually is to mitigate against interest rate fluctuations.
Mm-hmm.
So we will fix half of the client's loan for 12 months and the other half for 24 months,
Mm-hmm.
so that in case the interest rates fall in the next 12 months,
Yeah.
that first loan comes off that fixed rate, they can fix it onto the lower rate, but the other one obviously remains on the 24-month
24
rate.
months.
But then that just means only half of your loan is subject to the fluctuations at any one time, not the entire amount suddenly you go from 2% to 5%, for example.
So pre-approval is done, deposit done, due diligence done. We have done the loan structure.
Yeah.
What is the next step?
Next step is the bank will now generate loan documents to be sent to
Mhm.
your lawyer, who will
Right.
then get you to come in to sign that document, and then we wait for settlement date, which is when the bank draws down your loan and pays the seller, and you get the key to your house.
Right. 5 steps I can,
You can own your
Follow,
house. Yes,
and then I can have a house.
correct.
Okay, so thank you so much for giving this information. I want to talk about something like what are the common mistakes people make when they are buying, because you are in this industry and you
Yeah.
must have gone through many applications.
Yeah.
What do you think, what common mistake people make?
Okay. Everyone makes mistakes, so
Yeah.
maybe I'll talk about what they should do in order to make their applications look attractive for the banks.
Yeah.
First of all, don't get into debt. So if you are planning to buy your first home, try not to buy, for example, a car on finance. Try not to apply for too many credit cards. Don't use Afterpay. Don't use any of those buy now, pay later, because they function the same as a credit card and the bank sees it as a credit card. Keep all your payments on time, your utility bills, your phone bills, everything, because that all contributes to your credit score. I have seen clients who have made constantly late payments on their utility bills or their phone bills, which they may think is not a big deal, but then banks do run a credit check for every loan application, and any late payments is actually a strike against the customer. So
Right.
if the bank sees that you are constantly late with your phone bills, what assurance do they have that you can pay your mortgage on time? So those are the kinds of things that they need to be aware of. It doesn't matter what level income you're earning, the bank does look at good account conduct. So even if you're earning a lot of money but you cannot pay your bills on time, the
Yeah.
bank flags that as a risk.
Right. Okay. So these are the common mistakes people
Yeah.
make when they want to buy their first house, because they are not aware of all these
Correct.
things. Like these things can impact their application
Correct.
to borrow money from the bank, because if
Yes.
they're not making regular payments
Mm.
and having too much small amount of loans,
That's
credit cards,
Yeah.
and other things
correct.
like Afterpay and buy now pay later things.
Yes.
Right. Okay, let's talk about, because I didn't ask this earlier, how long it takes to get pre-approval.
Okay, the process can take between 4 to 6 weeks. Currently, banks are on quite a backlog of cases,
Right.
so their turnaround time has gotten a little bit longer.
Mm-hmm.
Some banks are better than others. So again, when clients come to us, we usually will assess their situation, whether they are in a great hurry to buy a house or they are okay to wait a little bit longer.
And
Yeah.
how long the pre-approval is valid for?
It is valid for between 60 to 90 days.
60 to 90 days. So
Yes.
for example, I have got pre-approval.
Yeah.
I have 60 to 90 days to,
To
find
a
the
property.
house,
Yes,
put a condition, and
Yeah.
put an offer on the house,
correct.
and do the due diligence,
Yeah.
and then the last part is restructure the loan,
and then you settle on the loan.
on the loan. Right.
So though the pre-approval lasts 60 to 90 days, we are able to extend it for a further 60 to 90 days.
Right.
So in essence, you do have between 4 to 6 months to find the house that is right for you.
Another question I want to ask in between, like, does it affect, like, if my income changes in after 90 days, let's say my income
Yes.
change?
Yes. If anything financially changes for you,
Yes.
you are obligated to let us know, and then we
Yes.
will let the bank know. So what the bank usually will do is, if things do change and we tell them that, they will maybe ask for extra documents
Right.
and reassess the application.
Okay. And I'll ask the last question because I don't want to make this podcast very long because
Yeah.
I want people to get just general knowledge about it.
Yeah.
And if they have a specific thing they want to know,
Mhm.
they can either contact you
Yeah, they're free to
or
contact me.
they can put a comment down on this video.
Mhm.
Just one question I think everyone will have in their mind is, what is a fee? Do you charge any fee for that, or how the mortgage brokers?
How do we get paid?
Yeah.
Okay.
Yeah.
We don't charge a fee to our clients.
Right.
How we get paid is when your loan settles, the bank pays us a percentage.
Right. Okay. It's that simple.
So yeah, so it's free for you, free
Yeah.
advice.
Yeah. Okay.
Yes.
Okay. So before we wrap up this episode,
Yeah.
let's say I want to contact you. What are the best options if someone is watching this video in
Mhm.
New Zealand and they want to buy their first home?
Yeah.
They want to know about the process,
Yeah.
what we talked about in this video, because every application will be different, depending
yes.
on the person's, the eligibility
Financial
and
situation.
financial situations. How someone can contact you?
If anyone is interested in getting a pre-approval for their property purchase, feel free to contact me. I am based in Christchurch, but I work with clients all over New Zealand. I work for Fluent Financial. You can find us on Instagram and Facebook, or you can email me at elaine@fluentfinancial.co.nz.
Okay, cool. Thank you so much for this lovely episode.
Thank
And
you.
I hope the viewers will find this information, what we talked about in this episode. And I think, that was our first episode. And I think we will come back again. We'll
It
have
will be
more
my
episode
pleasure.
on buying properties in New Zealand. I think next episode I want to talk about if someone already has a house,
Oh, yes.
how they can buy an investment property,
Mhm.
how they can take out the equity
Yep.
from their current property
Mhm.
and house, and we will cover all those topics
No
in the next
problem.
episode.
Yeah.
Cool. Thank you so much, guys, for watching this episode till the end, and I hope this information will be very helpful to all of you. All the details are in the description. You can contact her, and if you want me to make any specific topic video, then please comment down, and I'll try to get that for you guys on the next episode. Thank you very much. Take care.